Hi all, welcome to TCM Education. I'm Michael. I'm the analyst and the content creator on the channel. I want to talk about day trading in 2025 as we approach the earnings season, the second week of the earnings season for the second quarter of 2025. We've seen the first week; it was pretty exciting, not full-blown excitement. Maybe this part of the equation is coming next. We have earnings, important earnings this week, and super important earnings next week, and we will go on like this for about 6 to 8 weeks, with at one point hundreds of stocks reporting each day. So what makes 2025 different? First of all, 2025 we overcome the tariff issues. We overcome, I think, finally the interest rate issues. The markets are at all-time highs. Most likely, unless something happens that's really not foreseen, we will continue to move, maybe pull back a bit and then move higher. So the markets are primed for more upside. There are exciting new fields coming in. If it is AI, quantum computing, new waves of energy, robotaxi. I'm just making up four interesting new fields. Maybe there are others that I'm actually not aware of. Actually, I did not mention stable coins and new ways of dealing with bitcoins and other cryptos. All of that are combining into an exciting market, and this is a great time to talk about day trading, because people have a stigma about day trading, which is very hard work or boring, or you need to make money in the first 30 minutes and then could go to the beach, and all kinds of nonsense. Day trading is a job. You need to work 5 to 6 hours to succeed, and you need to have a platform, because it's a business. You need to have a platform, a plan, need to have the knowledge, and we are on the air in this channel for less than 2 months. I think the day after tomorrow will be on air, on YouTube for 2 months. So that's a short period of time, but I've been in this teaching and mentoring business for a long period of time, and I know the difference between 2025 and looking outside as a mentor now, not only as a trader that's only dealing with the tough side of day trading. So when you look from the outside in, you see the opportunities, the way the trading platforms evolved, the way the market evolved. It's a different. It's like the market is now is a Tesla versus the 1970s horrible gas guzzlers that were also unsafe. So now let me give you an example. And in front of me you have 16 stocks. Obviously the biggest in terms of market cap, and you can see the market cap here on this list, and we have 4 trillion companies, 3 trillion companies, Google, which is both of them is also 4 trillion, and we have Berkshire Hathaway at 1 trillion, and some that are knocking on the door like JP Morgan and Walmart and Oracle, Visa, Netflix. So a bunch of stocks that can be, according to the old way of thinking, day trading candidates. They have the liquidity, they have the intraday range, and you can practice and day trade Amazon every day, or you can practice and day trade the Broadcom or TSM or definitely Nvidia and Apple every day. But that's only one part of the equation. You can do it. Of course, you can day trade earnings, and we've seen examples over the last couple of days. Johnson & Johnson, amazing move on earnings. ABT, amazing move on earnings. ASML, amazing move on earnings. And we have other stocks that, sorry, weren't that amazing. JP Morgan, horrible. And TSM, challenging. And there were obviously, there are winning trades and there are losing trades. The idea here is that in this market, you need to cap the losing trades, and the winning trades will perform amazing versus the past. And now let's get into the new concept, which is, instead of talking about shares, which all of us as mentors used to talk in the past, and none of us, for whatever reason, obviously reasonable reasons, we're not talking about percentages move, because to have a 1% move once upon a time in a stock was a big accomplishment, and now it's not. Now the market is allowing us to research and puts us in a position where we can trade intraday positions of 5%, not one per day, couple of times per day, and maybe once per week a 10% position intraday. And when I say a position, I don't necessarily mean all your buying power in one position. No, I'm talking about a reasonable, let's say 20% of your buying power as a day trader in the US, which let's say it is only $20,000, and you go for 10% once a month, or if you're great, once a week. And this concept is mind-boggling, because it can create a total atmosphere of profitability. Once a week, $2,000, that's unheard of in terms of day trading with a $20,000 position. Okay, it can happen with a stock like CRCL, and it can happen with a stock like which nobody ever heard of, like Webull. I will give you an example. So the concept that where you trade for, like we used to trade in the past, I'm buying Johnson & Johnson at 40 or whatever, like 30 or 40, 15 years ago, and it goes for 20 cents, and I bought 400 shares and I made $80, and I was, oh wow, amazing. That's this concept is, why would I even trade Johnson & Johnson on a daily basis? I trade Johnson & Johnson once every 3 months if possible, and then I forget about Johnson & Johnson unless it pops on my screen for whatever reasons. So just again, we have this list of 16 matches, that's fine, and we have other list. For example, let me give you this list. Those who are familiar with the channel know that I'm using this list almost on a daily basis, and it's called the daily power list. And why is it the daily power list? Because it's a smart list. Okay, what do I mean by smart? I screen stocks that trade 5 million shares. I screen according to stock price, stocks about only $10 and up, okay, over $10. And I screen, this is the crucial number, for the intraday range to be above 10%. What does it mean? Again, for those who are new to this concept, I want a stock that starts the trading day at $100 to trade at least from 100 to 110. And if the price is $10, to trade between 10 and 11. That's the 10% of the range of the stock. Okay, why is it important? Because it gives us, the day traders, the opportunity to trade between the highs and the lows, it needs to be wide range bar. Okay, and of course we need the volume. And if there's a pickup in volume, even better. But let's not dwell into that. Okay, so 5 million shares at least to appear on this list, and this number is crucial. And if there are, let's say, 17 matches on Friday, and let's say today will be on the match on this list at 12 noon, only 3. Okay, so I will lower this number to 8. And if there are too many, let's say there are 35, I will increase the number to 12. So it's a piece of cake to sort out. Okay, and then I can sort them out according to my preferences. If it is volume, names that I'm aware of, maybe stocks that are not shortable, or those that are very spready and so forth. So the 17 is not really 17, it's maybe like 12 to 13. Okay, and then I need to sort out and find a trade. One trade in the morning session, one in the afternoon, and maybe one in the late session. The early session, sometimes I won't be able to use these parameters because they are very harsh. But after 11:30 or 12, the list will start filling up, and the results will be astounding versus the alternative. So what is our business at TCM basically is to teach and mentor traders that wanna make a change in their performance. And this way, using a smart scanner, using low risk intraday patterns and combining them is key to profitability. And those who won't do it will continue to struggle, versus those who will get into this approach where it's easier, more profitable, and you will trade less for more. And again, for those who haven't seen our concept before, let me give you the examples. For example, this is the list from Friday. Now let me sort it according to winners and losers. The list is basically, as you can see, winners and losers. Okay, we have a stock that's up 58% and a stock that's down, SRPT down 35%. Let's start with a loser. Although I have to say, in this market we don't want to deal with the short trades. Why? There's always something going on. Where is it? There's always something going on with shorts. Either they're not the shorts are not available, or the stock is not shortable, or when you want it, it is shortable, but the fill is not great. So there are issues with shorts, and in this market, again, this is a thing of the past. We loved shorts. No, we don't love shorts anymore. We love longs. Okay, why? Because there are so many barriers when you take a short trade. Now, if you go to the list, there are 5 stocks that are short here. I mean, losers on the list. 3 of them don't have shorts at all. One is really questionable if you can get shorts, like SRPT, and one maybe you can get shorts. Okay, so again, the shorting advantage is not here. Not to mention the strength of the market and the unique sectors that we can operate, again, according to the list. And again, the list is, like I said, only part of your repertoire as a day trader. You can expand to many other venues, trading sectors, trading the large cap, trading whatever. Okay, let's focus on SRPT. So I'm posting here 2 short examples, one at 18 and one at 16, being that we are basically traders that we are looking at. I'm looking basically and suggesting that you trade round numbers. Don't trade anything other than round numbers. But of course, many people don't agree, and they tell it to me. I don't agree. I trade whatever I feel comfortable. That's fine. Okay, trade whatever you feel confident. And if you're making money, who am I to tell you not to do it? But those who want to learn from our concept in our mentoring session, we start with the round numbers only. Okay, and if we cannot get a trade at a round number on one stock, we'll move to another stock. So that's one example. And you can see the percentages here. When it goes from 18 to 14, that's 20% intraday. So it's not like it's not unheard of in the past, but the concept is that it's very hard to get in such a trade 20% intraday. It's not that hard. It's hard to get the shorts, but not really hard to trade. Or another example, again from Friday, Webull. The stock is moving higher. It's up, whatever it is. It's into this list at one point. Okay, and if it's not in the list at one point, it's in other screeners, because there's obviously not a one screen that we're looking at. And again, you can see here the consolidation above the VWAP, and then the consolidation between 1550 and 1535. That's a 15-cent consolidation. And once it breaks, the stock moves more than $2. Sorry, more than $1.70. $1.50 is 10%. So this is a 10% move, guys. This is the 10% move. Okay, risking 1%. That's a 10-to-1 intraday risk. So you risk here 1% on the trade, and if you're lucky, you get 10%. And if you listen to our mentoring session or listen to our advice, you don't sell anything out of the position until the closing bell, which is 358. And at 358 you close the position. Whatever happens, happens. Sometimes good things will happen, sometimes bad things will happen. If you are 8% in the money or 9% in the money, you may end up being 12% in the money in the last minutes, or you lose another 4%. So again, the concept is that you are trading the right stocks, stick to the right stocks, and you'll be successful. Or another example, IVZ. I talked about this stock, I don't know, I mean, over the weekend like 20 times with people. Perfect. Again, talking about percentages, it closes up 15%. Volume is huge. It's a huge gap up and go on the daily chart. You have an early entry, you have a late entry. If you have a late entry, okay, so you gain 3% into the close, or 4%. If you have an early entry, you gain almost 10%. And again, those stocks are not under the radar, covered somewhere. Those are actually above the radar. This is where a smart screener will search for exactly for this type of stocks, which have great volume, great intraday range, and if your timing of entering the trade is perfect, then one trade like this, again, in a small position for a US day trader. Maybe $20,000 is not a small position for a European or Israeli day trader, where they mostly have 10 to 15 grand into the account. Okay, but in the US, you need to have at least 35 to 40, and that's 4 times buying power intraday, which may or may not give you a broker in Europe may give you or may not give you. I'm not familiar with the regulations all over the world, but I'm familiar with the US regulation. So you have enough buying power to be in 2 positions, sometimes 3. Okay, so, and again, it's not our decision to look at your account. It's none of our business. Our business is to mentor you into the mindset that it's possible to trade intraday based on percentages. Not only that it's possible, it will be very profitable. Okay, guys, I hope it was illuminating enough. If you have any questions, use our email. Do like and subscribe our channel. It's important for us to grow. We are only 2 months on air, the day after tomorrow, and we thank you for being here with us. Do use our email to inquire regarding our mentoring services, and we'll see you in the next video. Thank you.